Maybe you're wishing you'd stayed in bed this morning. You woke up to find out your country was in recession for the first half of the year. And if you have investments, they probably took another hit in the markets. So how worried should you be? The bottom line is here to fill you in. Jim Stanford is an economist with Unifor. Preet Banerjee is a personal finance columnist and advisor. And Amanda Lang is our senior business correspondent. Their thoughts in just a moment, but first, some context. Today's sell-off was steep. And once again, the trigger was bad news from China. Manufacturing has shrunk at the fastest rate in 3 years.
That's dragging down both Asian and European markets today.
The vigorous growth that fueled a global boom last decade is nowhere in sight. China's dismal news whacked the price of oil, bleeding off recent gains that had sparked some faint hope for the oil patch. Well, forget that.
There is no doubt that our big challenge is commodity prices that the government of Alberta does not control.
The oil patch is reeling from the loss of more than 35,000 jobs, with hundreds announced just today. The loonies' dive was supposed to stimulate Canada's manufacturers, but a lot of them have vanished. Just days ago, The Economist called Canada the new Rust Belt, noting that 20,000 factories had shut down as of 2012. So what's in store for Canada's economy, for your family's prosperity? Are things really as bad as they seem? So kind of a scary setup there. What do you think, Preet? Should Canadians be scared?
You know what? Scared is a pretty strong word. I would certainly be concerned. And when the numbers were released this morning at 8:29, whether or not they were going to be, a slight negative growth in Q2 or slightly positive, I think the real point is, had they even escaped the definition of a technical recession, the growth is pretty close to zero. It's not horrible. It's not great. It's weak. So you should be concerned, but definitely not scared.
Jim?
Painful, gritty, depressing. Yes,
I guess I was wrong.
I wouldn't call it scared. It's kind of a gritty continuation of tough times.
Amanda?
Yeah, I mean, it's a reality check. Again, you can argue about whether, does it matter if it's 0.1 decline or 0.1 growth. It's nowhere near our potential. And that's where people actually should, I think, less scared and more motivated to say, what's going on here and what are people doing about it? And when I say people, I mean the people that are, campaigning for the top job.
Yeah, well, we can't avoid getting into the politics at some point. There's been so much debate about, is it I can't believe I'm doing this, a technical recession, because it's based on behavior in one sector. What do you think of that?
It's a very esoteric kind of argument. You can find economists who will say it's actually not a true definition of a recession, 2 quarters. It's just one we've sort of adopted. What I would say is every time we've seen 2 quarters of contraction, we call it a recession. And so to suddenly say today, we're not calling this one a recession, that seems a little bit tidy to me.
Yeah.
The interesting thing, too, is that for the first time ever, the definition of recession is actually in our law. The Conservatives passed a balanced budget law just before the writ dropped to sort of show that they were, fiscally prudent. And
but we didn't hear that word today.
They actually defined recession as 2 consecutive quarters of negative GDP growth. Now today they're running 100 miles away from that definition, but I think they're stuck with it.
Well, we have to recognize there are a lot of economists who say, well, listen, a recession is normally accompanied by losses in jobs across the board, decrease in spending, and we haven't seen that across the board.
Part of it can be also what kind of recession. Recessions come in different degrees and shapes and sizes, so this obviously is a mild recession.
And it's not just the GDP numbers, right? We were talking about the stock market collapsing, the gas prices, oil prices plummeting. That plays into all of
Sure.
this.
No, there's lots of weakness, and in fact, we were kind of poised on the balance of zero to start with, even before the oil price decline came along. So that's where Preet's point, were we slightly above or slightly below today? It didn't matter. The fact that we were anywhere near zero is itself the defining feature of our weakness.
It is, though, a very regional kind of slowdown. That we would acknowledge, even if in the regions that are doing well, they're not doing as well as we would like. The weakness is very concentrated in resource areas in a couple of key sectors. And so you could sort of say it's patchier than some recessions have been.
Well, we are in an election campaign, and so there was surprisingly a little bit of spin from all of the parties today. This was Stephen Harper's take today.
Obviously, there have been challenges, particularly in the energy and some commodity sectors because of falling prices. But the fact of the matter is, over 80% of the Canadian economy has been growing. The Canadian economy as a whole is now growing according to the June figures. So that is the reality.
He said that 4 times in his presentation today, that 80% of the economy is doing fine. What's your take on that?
I think that claim is demonstrably false, Wendy, and several economists out there have shown that. If you look at the sectoral breakdown, about half of Canada's GDP and dozens of different sectors have been declining over the year. Even his broader claim that we should just stick to the course and let things work themselves out, I don't think is credible. Even if you look in a longer run sense at the Conservative record, I've co-authored a study that looked at it since 2006 to 2014, and the overall economic performance has actually been the worst in the post-war period. So that idea that everything's hunky-dory, just stick with the plan, I don't think is going to wash.
Well, that specific statistic that he referenced came out of the July Monetary Policy Report from the Bank of Canada. That's where it comes from. So 17% was in decline, and that was energy and non-energy commodities, and 83% on this chart was shown to have grown. But to say specifically that 80% of the economy is growing, so you could quibble with that, because one, I believe it was Stephen Tapp at the Institute for Research on Public Policy said, well, of the 20 sectors since December to May, 11 of them grew, but 9 actually contracted. So by that measure, that's not 80%. So some industries are doing the heavy lifting, but not 80% of the rest of the economy is all doing well.
I mean, you know you're in trouble when you're looking to economists, with all due respect, to give you clear answers on this stuff. You can parse this 19 different ways. What I would say is, and where it's going to, I think, come down, and it does become an economic question of confidence in spending, how do people feel? Is your job secure? Are you going to make more money this year than last year? Those are the questions that people want to see the answers to.
Well, and they want to know, is the recession the past, or
are we in one now?
Yeah.
When we don't know yet.
When will we know?
Well, at least another
we only learned today that we're in one in the first half of the year. Now it'll take some time for the rest of the data to flow in. Some people are saying the strong June number that was there means it's all done and everything's back to normal. I don't think that's true. The main reason for the recession has been a sharp decline in business investment, and that is clearly going to continue. The oil prices declined further.
The Rust Belt, we heard.
Well, that's referring to parts of Canada that honestly never got out of the last recession. So. I think it's absolutely wrong to say this is a past tense story.
The Conservatives obviously aren't the only ones trying to put a spin on this story. We heard from Tom Mulcair and Justin Trudeau today basically saying this proves that Stephen Harper and the Conservatives have messed it all up and we do way better. I know that you're not political pundits primarily, but who will benefit from this? Who will be hurt by the message that we heard today on a recession?
Well, certainly Conservatives would be hurt a little bit because they champion themselves as good fiscal stewards and financial managers. So any financial data point that shows any weakness between now and the election, you can be sure that every opposition party is going to jump on it at any opportunity that they can.
I have to say, I think the opposite. I think there have been a lot of quibbling about deficit, no deficit, contraction, no contraction. I think Canadians will step back and say, who's got a big idea? We just talked about 20,000 manufacturing plants closing in the last decade or so. Who's got the idea of how to fix that? And I don't know that any party wins on that front so far.
I think the Conservatives' problem is that they vastly oversold their claim to be the best economic managers. Remember Mr. Harper's terminology that Canada was the envy of the entire world. That's his direct quote, and it's ridiculous. So I think compared to that hyperbole, the reality that Canadians face, which is complex, some places are doing better than others, but on the whole, it's tough times. That reality jars so much with the inflated rhetoric. I think the Conservatives are the main victims.
Another issue is with the NDP's platform. So they've said we are going to guarantee to balance the budgets in the first year. Well, if growth continues to be weak, then to meet that promise handcuffs them in other ways. So that's another potential problem.
Economists were already talking about that today, not for the first time, but we've had monetary action on our economy. Where's the fiscal action? It comes from governments, it comes from strategy and policy, and when you've got an economy this weak, that is where you want to see a little stimulus help. So I think that's going to be a subject that comes up again.
Well, I guess whether or not we stay in recession or not depends a lot on confidence, on psychological factors, getting people back to work, getting people back to the mall. What's required for that? What are you going to be hoping for?
Well, what's interesting with the GDP numbers that were released today, the consumer spending has actually increased. And, they continue to punch above their weight class when it comes to spending. Although sentiment sentiment is probably dropping, especially since everyone's talking recession, recession all the time. We could talk ourselves into lowering sentiment and decreasing consumer spending. But at the same time, you have to realize that there are a lot of people who are rolling over 5-year mortgages that they got at higher interest rates into a lower interest rate environment. And for some households, they're freeing up $200-300 per month. So that helps as well.
Yeah, how do people figure out what to do? I mean, is this a time if you need a car to buy one, or play it safe?
A car is maybe a tough example for Jim to answer.
Oh, no, won't buy a car, especially a Canadian-made car.
Okay, a house, a computer.
Well, that all depends on your situation, Wendy. And the reality is so many Canadians have got a very precarious employment situation. You know, the total employment numbers have increased a bit, not enough. But dig deeper and you see people in contract jobs, temporary jobs, part-time work when they want full-time work. So I don't think any of them are really going to go out and buy a car, buy a house. And we can't count on consumers to lead the way anyway. I mean, it's convenient that they're willing to, go into debt and spend. That's helped us avoid a deeper downturn. But we've got to get business investment, exports, and government investment in gear. Those are the fundamental drivers of growth, and then consumer spending will follow. And I hope if I've got one wish for the election campaign, it's that we get to look at some of those bigger, longer-run structural issues. Because we had a big problem in Canada even before this technical recession hit us.
There is one hope that we could lay out there, and that is that with all the uncertainty in the world and our poor performance, the United States is actually doing better than many had feared. And if it continues to do that, that of course is wonderful.
Our economy has always been so tied to the American economy, and yet they're doing so well, and we're slipping. We can no longer boast that we're leading the G7.
No, that's right. But if they continue to do well and our dollar gives us that advantage on the export side.
Well, why are they doing so well and we're not?
Well, they're more productive than we are.
Yeah, and I think they've been unconventional in their approach to things. They used quantitative easing and other measures to stimulate spending. They drove their currency down in order to boost their exports. They tolerated much bigger deficits, whereas in Canada, we've been obsessed with eliminating the deficit as quickly as possible. Those factors are very important in explaining why the Americans are going way past us today.
Economists will debate, I think, for centuries whether or not the fiscal stimulus in America worked or not, whether it achieved some miracle. Some would say no.
We'll have another debate on that someday, but we've only got about a minute and a half left, and I'm wondering, what are you going to watch for? We've got job numbers coming out later this week. What else? What's going to let us know whether we can breathe or worry?
Well, I am interested to see if the June increase in GDP is followed. There are a number of banks who have said, the rest of the year looks pretty good, but we can also revise ourselves a little bit worse, a little bit better. We don't know. Certainly looking at the Friday jobs number, because at the end of the day, if you have a job, Canadian consumers shown time and time again that they continue to spend and they're okay as long as they have income.
And yet so many jobs have been lost.
And the overall job creation hasn't kept up with our population. So in the labor market, it still feels like a recession.
So what are you going to watch for?
I would say business confidence on that front, because when businesses feel good, they'll invest, they'll create jobs, and we have not seen that happening.
In the GDP numbers next month, it'll be interesting because half of the big gain in June was due to one industry, the oil industry. Largely, it was production coming back on stream after the forest fires in Alberta. So that can't happen again. So, in fact, it'll be interesting to see if the July and August numbers continue a positive trend or not. It's not guaranteed that they will.
Well, who knows whether the recession is over or not, but sure to come. More spin on the economy. Thanks, guys. Amanda, Jim, Preet.
Thank you.
We will be right back.